for Singapore GST purposes. So my name is Jack, and I'm going to talk about in this presentation how to master the understanding of Singapore GST when it comes to supplies, and the keyword is supplies. All right, so without further ado, let me show you my slide and just hang on for a while. There we go. And as you can see, the topic is master GST supplies in Singapore. What are the types of supplies that you know in Singapore GST, and what are the respective implications? Okay, so in order to do that, let's look at the learning outcomes, which we have 4 here. Number 1, to understand the concept of supplies for Singapore GST purposes. Number 2, let's talk about examples of standard rated supplies, zero rated supplies, exempted supplies, and out of scope supplies. Of course, there are more than that in Singapore GST. We are going to deal with these 4 in this presentation. And number 3, how to determine the implications of each of the supplies type in respect of a business operations. And last but not least, what I'm going to do, instead of boring you down with all the theories, the information, I'm going to showcase the case studies and again the framework or the methodologies that I use to solve GST issue. Now, if you have watched some of my videos before, I'm just here repeating myself just in case you forget. It's very important for you to apply GST concepts, not based on what you already know on the applications of income tax. There's a saying, never ever apply your understanding of income tax concepts to solve GST issues, because after all, income tax and GSTs are 2 separate branches of tax law. Okay, so in order for us to do that, let's look at what we are going to cover. And here's the table of contents. So we are going through bit by bit in this presentation. Introduction to GST supplies, and then we talk about the standard rate supplies with examples, followed by zero rated supply, exempt supplies, out of scope supplies. And of course, at the end of the day, we will look at the case studies to understand the implications for GST purposes that you can imagine as a business operator. Like what are the GST implications when it comes to understanding all these supplies. And we'll summarize all the key lessons from this presentation to wrap up this presentation. All right, so let's look at the first concept, introduction to GST in Singapore. Now, I assume you have already read or familiarized with your materials, so I'm not going to give you very generic terms. I'm just highlighting some of the key things that are relevant to this topic. Now, I'm going to talk about supplies for GST purposes. Now, you notice that we, like income tax, we talk about income all the time. And when it comes to GST, our focus is actually this word supplies. Now, in order to solve GST problems, the first thing I love to actually share with my learners or my clients is to go through a very simple flow chart. So I'm going to give it to you. And in order to give it to you, so you may want to notice that the way I present is not showing you all the slides. I'm going to use my Apple Pencil. I'm going to draw some of the diagrams, some of the templates, flowcharts, and in case you want to follow through, by all means do it. Okay, I do not want you to just read the words. I want you to actually understand, and that's the way I solve GST problems for my clients in the real world. Okay, so in order to understand GST issue, there are a couple of things I would like to highlight. So number 1, it's pretty interesting to look at this particular flowchart. Now this flowchart, sometimes you may notice my handwriting is not really good. Just notice that my handwriting sucks because I've been using my Apple Pencils to write. And in case you cannot read, to listen carefully, I'm talking about a flowchart. Okay, so the first thing is, when it comes to GST issue, the first thing we have to understand, which is the reason why we spend a lot of times in this presentation to talk about supplies, is that when you do not have any supply, there's actually no GST issue. So the question is supply. Is there a supply in your transaction? If the answer is yes, then we will look at second question, the third question. But if you do not have any supply, the conclusion is what? No GST issue. Yeah, it is as simple as that. When I share this with clients, they were surprised because is that so simple? Yes, because this is how GST works. So if you do not identify any supply in your transaction, there's actually no GST issue. Because GST after all is a tax on transaction. Okay, consumption is a transaction. So if you do have a supply, in your case, I'm going to explain further what is supply for GST purposes later. Then you will have to ask yourself the following question. Is there a supply of goods? I call it SOG, supply of goods. Or is there a supply of services, SOS? Okay, not to ask for help, but really about supply of services. And why is that important, you may ask? Okay, because if I know it is a supply of goods, then I apply the place of supply rules for goods. And if I know that this is a supply of service, then what I do is I apply the place of supply rules for services. This is how I solve GST issue to start with. And therefore, it is very important for us to understand, hey, what is this concept of supply? What is it all about? Every business transaction may be thought, you may think that every business transaction is actually a supply, because if you think about generic terms, it is actually about transferring goods or services from your company in exchange of or consideration for money, or in some cases it could be a barter trade. It's a trading services and trading in goods and services in kind. In other words, like I'm doing a trade-in of my old computer and get a new one. So there's actually a supply. Actually, not just one supply, because it's the barter trade, it's actually more than one supply. So you may want to ask yourself, what is supply for GST purposes? Now, supply for GST purposes is actually defined in the GST Act. Again, the reference section, if you are familiar with how I look at GST, I actually referred to the GST Act. Subsection 2 of section 10 define what supply is. So in short, if you can understand the wording of the legislation, which is very hard, I have to admit, especially for this word supply. So it's actually about one word and one word only. It's about consideration. Now, if you can still remember or have studied business law, well, in your degree, you will have remembered what constitutes a valid contract. Now, the concepts such as offer, acceptance, and the third element is what? You're right, consideration. Is something for something. Okay, so if a transaction if you in a transaction can't identify a consideration, there's actually no supply, so to speak. And the worst consideration, I'll leave it to you to explore from your materials or go back to what you have learned in business law. What is consideration? Okay, and then the next thing to understand is this: the GST Act actually specifically look at a couple of things that may constitute a supply for GST purposes. So, for example, a grant of the right, the assignment of the right, or even talking about surrender of the right, actually they are considered supply for GST purposes. So, for example, I agree not to compete with you, okay, in your business, and I surrender my right to compete. And then in exchange for that surrender of the right, you pay me a sum. You pay me a sum for not competing with you. So the question is that a supply? The answer is yes, because it is an exchange. Exchange for a promise not to compete with you, and because of that exchange, I'm getting paid. Okay, so that is actually a supply for GST purposes. So you may want to study a bit more about that. Now, next question is that what are the importance of understanding different types of supply? So the question is, why is that important? Well, the answer is very simple. Number one, if you know that there are different types of supply, like what we're going to talk about in this presentation, would be standard rated supply, zero rated supply, exempt supply, and also out of scope supply. You got to know the different types of supplies, because at the end of the day, when it comes to filing of the GST return, you need to put the right number in the right boxes, or else that means what? That means incorrect filing of GST return. And then in Singapore, the standard rate supply right now is 9%. So if let's suppose you carry on a business transaction and you do not classify the transaction properly, and you think that you do not need to charge 9%, that is not just incorrect filing, you actually have to pay penalty to the Singapore Tax Authority, because you're supposed to charge 9%, but you didn't. So the classification is also important. Okay, so that's really from a compliance perspective. And number 3, zero rated supply is actually GST at zero. So for GST purposes, a zero rated supply is actually a taxable supply. So when you decide whether you have to register for GST, if you remember the rules, the annual value of the taxable supply has to be more than $1 million Sing dollars. Okay, the annual value of taxable supply. And if you do not understand the GST at 0%, you may not include the zero rated supply as part of your total taxable supply, and then you may end up, although you're required to file GST registration, you just didn't do that. Okay, so I would like to highlight one section in Section 8 of the GST Act. Okay, this is actually Section 8, subsection 2, which defines taxable person. Again, is pretty important. Why? Because a taxable person for GST purposes is a person that has already registered for GST, because the law says you have to, but the other part is more important. So it's someone who has already registered and somebody who is required to register, but not done yet. So listen carefully. Section 8.2 talks about a taxable person who is a person who is required to register for GST but hasn't done so. So it's not just about people who have already registered. And what's the implication of this second half of the sentence? It means that, number 1, if I haven't registered for GST, for accounting purposes, I wouldn't have a GST output tax account and an input tax account in my balance sheet. Okay? And what does it mean? Therefore, if you incur any purchases, which is subject to GST, your purchase plus your input tax would likely be recorded as the expense in the profit and loss account. And if you are not careful enough, you might be claiming a deduction on the portion of the input tax for that business purchase. And this is actually not allowed under the Income Tax Act. Okay, I leave you to find out which subsection is under one of the section 15.1. Okay, it says that if you are required to register, but you haven't done so, you are still not allowed to claim input tax as an income tax deduction. So this is what we call one failure results in penalty for both GST and income tax purposes. So to understand the different types of supply can lead to incorrect filing of return, GST return, plus incorrect filing of your income tax return if you are not careful enough. Okay, so let's talk about a situation here. So in each segment, where relevant, I'm going to give you a case study to just recap what we have discussed. And most importantly, rather than me explain to you all the boring information concepts, let's look at the case study to see how what I've said can be applied. All right, so this is how it works. This case study, Smart Tech Distributors. Smart Tech is the distributor of consumer electronics in Singapore. So before we do anything, remember, I do not like to just tell you all the in terms of just telling you, okay, because I know a lot of people want to learn. Actually, a lot of people prefer to learn by watching or looking at diagrams. And this is what I said to many of my students. It is always a best practice when you look at the information, you create a diagram to see how the word flows. Okay, so here is a line, and I said everything below belongs to Singapore, everything above is outside Singapore. And then here we've got Smart Tech, who is a distributor of consumer electronics in Singapore. And then it wants to apply correctly the GST rules in the operation, which is good because they are aware there are penalties involved for incorrect application of GST rules. So the question is, let's identify what constitute GST supplies or GST supplies for smart tech, and explain why it is important for them to understand different types of supply. Now, it is a distributor of consumer electronics. So prima facie, you may think that there are two types of supply here. One is supply of goods, SOG, the other is supply of services, SOS. Okay, and like I said in the previous diagram, the determination of whether the supply is a supply of goods versus a service will lead to the different application of the place of supply rules for goods and services. So again, this is the fundamentals. So let's suppose we talk about supply of goods here. And then what happens is that, hey, it is supplying consumer electronics, maybe the chips, to a Singapore customer, SC Singapore customer. So this is a supply of goods. Now you may say that, hey, this is a local sale. Obviously, it is automatically 9%. Well, I would love to alert you this is not always true, because the place of supply rule, let's suppose we talk about supply of goods, place of supply rule. I realize that my face actually blocked the writing, so I'll move here, okay, so you can see. So the place of supply rule for goods requires you to identify at the time of supply whether the goods is in Singapore already, and then the legal title to the goods passes in Singapore. It doesn't matter whether the supplier is based in Singapore or not. Many people actually thought, hey, because it's a local sale, therefore it is a local supply. And then I would love to invite you to remember this question: who says that? Because the worst thing you know is you heard from somebody who doesn't know the GST rule like you, tell you something which is wrong, and you do not verify. And then you think that the person who told you the piece of information is correct, and then you tell your client the same. And then it continues to be wrong. Okay? So it is important. And if, let's say, it is not supply of consumer electronics item, it is supply of services. For example, that could be customization of the chips, or actually some form of training of how to use the chips or the integrated circuit IC is a supply of service. Then the fact is that, hey, I've got a Singapore customer here, and you may think, hey, this is a Singapore service, and the service is rendered in Singapore, so therefore it must be 9% standard rated. Again, the question is, who said that? Because the place of supply rule for services has no bearing as to whether the services are rendered in Singapore or not. A lot of people thought that they use the income tax rules to apply and solve GST problems. And you can imagine at the beginning of this presentation, I said, no. Income tax is income tax. GST is GST. So the reason why the service applied by Smart Tech distributor to the Singapore customer, in this case a service, is standard rated, is not because the services are rendered in Singapore. It is because Smart Tech distributor, Smart Tech is actually a person that belongs in Singapore. This is how the place of supply rule works. It's nothing to do with whether services are rendered in Singapore. It's because Smart Tech is belonging in Singapore. Okay? So when you study the materials, pay attention to how the place of supply rules work for goods and services. And then you want to know that, hey, in this case, it is 9%. But what if, although Smart Tech is a company in Singapore and it is actually working with a Singapore customer, however, the goods happen to be elsewhere, outside Singapore, and then do you say that this is actually a standard rate supply? Not really, because the title to the goods passes overseas, outside Singapore, so it might be out of scope supply. And then you may say, hey, what if the customer is overseas and then there is an export of the integrated circuit chips to somebody outside Singapore. And you may say, hey, this must be zero rate supply. Again, the place of supply rule suggests that, yeah, it might potentially be export. However, if you read your materials carefully, you notice that the phrase under section 21(6) and 7 of the GST Act actually has a very interesting clause that says that it can only be is only zero rated when the controller of GST is satisfied. And mainly, how is the controller of GST satisfied with the fact that the goods are exported? It is by way of something called EDR, I call it EDR, which is the export documentation requirement. The controller of GST has to be satisfied that the export documentation requirement is satisfied. What do I mean by that? Go and review the export guide. The export guide actually explains what the controller of GST is looking for. Okay, if you can't satisfy the EDR, and guess what? You may think it's export and therefore zero rated supply. Not true. It is actually a standard rated supply. Okay, so that means you know that the differences between standard rated supply, zero rated supply, but depends on the situation. Even if you miss one step, for example, like you cannot imagine that happens to my clients. Unfortunately, in real life, it happens. Export by air, the client comes back and tell me there's no airway bill, which is one of the documents that you must have for export by air. The client told me they don't have airway bill, and the client says, like, in terms of export of goods by ship, there's no bill of lading. And then I have even one case where the goods are transported from Singapore to Malaysia via causeway. The requirement says that you need to have the vehicle number on the export permit. And guess what? The export permit doesn't have the vehicle number. You name it. I have seen that in my client's case before. And therefore, what I can only tell my client is that if you don't have the bill of lading, if you don't have the airway bill, if you don't have the vehicle number on your export permit, guess what? Everything has to be standard rated. It's unforgiving, non-negotiable. This is the harsh truth or reality of the GST practice in Singapore. Okay, so understand why I'm so fussy and I'm so passionate about helping you understand the different types of supplies, because one move can change the whole outcome completely. Okay, so let's continue our conversation. Let's talk about standard rated supply. Okay, so standard rate supply, as you can imagine, are supplies that comes with right now a 9% GST. We used to have 7 2 years ago at the time of recording. We have GST rate at 7% from 1st of July 2007 all the way to the last day of 2022. 2023 we have 8%, and right now at the time of recording the GST rate is 9%. Okay, this is, I believe, the most popular categories of goods and services supplied in Singapore, because like I said, many people thought it's local sales or local service. So I will apply GST at 7%. GST at 9%. Sorry, I still live in the 7% world. Okay, so a standard rate supply is a supply with output tax of 9%, and as a result, it is not a GST at 0%, which is called a zero rated supply, or it is not subject to GST, which is either out of scope or exempt supply. Okay, so standard rate supplies is just a supply that comes with a 9% GST charge. In Singapore, it's pretty straightforward when it comes to all this GST rate. It's either 9% right now or 0% zero rated supply, and then it's actually not applicable. So we have only 3 types of GST rates in Singapore. 9% is a standard rated supply, 0% is a zero rated supply, NA could well be exempt supply or an out of scope supply. All right, so then let's move forward. in terms of the Singapore context, what are some examples of standard rate supply? So just imagine, after watching this video, you feel a bit tired, you go to 7-Eleven, okay, or other supermarket to buy a drink, okay, and then the supermarket is GST registered, and you pay GST on this. So our retail sales, typically, that takes place in Singapore is a classic example where standard rate supply will come in. Don't believe me? Go and buy a drink from NTUC FairPrice, Giant, or any other supermarket and look at the receipt. You will know that you are charged 9%. All right? How about services? What is the context of a service that you will be paying GST? Touch wood, you are watching this presentation via a computer or notebook. And just bad luck, after the presentation, your notebook, the screen is off somehow by accident, and you cannot turn on the screen. Then what do? You send the notebook for services or for repair, if you like. And at the end of the day, the work is done. And supposedly the service is $100, and you wonder how come the fellow asks you for $109. And you know what the $9 is? $9 is actually the GST. Okay, you have to pay the GST on the repair service. Now the question is that why is there a 9% charge? Okay, so you send your notebook for repair, your computer for repair, and this is a local service provider. Again, it's not because the services are rendered in Singapore. It's because this guy called the local service provider belongs in Singapore and it is GST registered. And that's why it's obliged to charge you the 9%. Remember, never solve income tax issue using, never solve GST issues based on the income tax principles. Okay, I may be harping on this again and again throughout the presentation. Okay, so then once you are GST registered, you know it is a GST, it is standard rate supply, then obviously you would know, okay, for output tax purposes, you need to account for the 9% of the value of the supply. There's also something called, other than accounting of the GST, there's a tax invoice requirement. So tax invoice requirement is not the focus of this presentation, but just take note that as a GST registered service, GST registered person, you're obliged to issue tax invoice, unless you fall within the admin concessions given by IRAS. So tax invoice, whether it's a tax invoice or simplified tax invoice, you need to show the GST charge properly. Okay, so again, I'm not talking about this here in this presentation. There might be another video that talks about the tax invoice requirement. Now, let's suppose you are charged standard rate, mean the 9%. So instead of you charging somebody, you are charged. So we call this the input tax, okay? Because you are the purchaser of goods for business purposes or consume services for business purposes. So you are charged 9%. And guess what? The 9% becomes your input tax. You have to demonstrate and have the onus of proof that the purchase is for business purchase. Or in the terms under section 19 and 20 of the GST Act, it says that it is incurred in the course or furtherance of your business. It's a very long term for GST purposes. It means that it's a business purchase. Then you are able to claim it back from IRAS in your return as an input tax credit, provided that you have a valid tax invoice. So standard rate applies, it depends on whether you're the one charging out or you're the one being charged. The accounting of GST in terms of output tax and input tax becomes critical. Okay, so let's talk about this case study. Fresh Mart Grocery. Okay, so you have a look of the facts of the case. It says that, hey, Fresh Mart operates a chain of grocery stores across Singapore. So in terms of diagram, anything below is Singapore, anything above is overseas or outside Singapore. So Fresh Mart is based in Singapore. and then it sells various food products and household goods. Obviously, you can imagine as a grocery stores, the targeted customers are you and me. So therefore, we are not the one GST registered because we are the consumers. So that question is that, okay, define what constitutes standard rate supplies for fresh mart and it's discussed how these should be accounted for in the business. So it's just like reiterate of what I've said earlier. Number one, if fresh mart is GST registered, then almost every sales it makes to the customers who are you and me will be subject to a 9% GST charge. So therefore, for accounting purposes, fresh mart would need to account for the GST output tax, okay, in its return before it's submitted to IRAS. And then if it incurs any business purchases, okay, then the 9% that is charged to fresh mart becomes input tax. Again, the question is that whether it can claim it back as input tax credit. The answer is yes, of course, provided that number one is a business purchase, number two, it has a valid tax invoice. Okay, so this is pretty much standardized, and I think it's straightforward, isn't it? Okay, so without further ado, let's continue with another types of supply called zero rated supply. Now, the first time when I learned zero rated supply, I thought that zero rated supply means that GST is not applicable. And by now, you should know that this is not true. Zero rated supply is just a supply where you charge GST at 0%. The first time I heard of this, I asked like, what's the big deal between not charging GST versus charging GST at 0%? Well, the big deal is this. The big deal is that in Singapore, standard rated supply and zero rated supply combined are known as total taxable supply. And that is the amount for you to determine whether you have to register. The $1 million threshold is the value of is the annual value of your total taxable supply, which means both SR and ZR. Okay, so if you do not understand ZR or ZR is actually part and parcel of your total value of your taxable supply, you may miss the $1 million mark if you are not GST registered yet. And then you realize you're supposed to register, but you haven't. Then what will happen then? Penalty for not registering for GST when you are required to do so. The fact is that if you are not registered for GST, but you actually are required, you are a taxable person for GST purposes. Remember at the beginning I said, you don't have an input tax account, you don't have an output tax account, so likely any input tax you incur would be under your purchase reflected in your P&L, and sometimes you might be by mistake claiming a deduction of the business purchase plus the input tax. And then that becomes a breach of the income tax requirement. So by knowing this difference alone, save you trouble in GST and potentially income tax. How many of you realize it's such a big deal? Okay, so in Singapore, what supplies are regarded as zero rated supply, and there are only two types. One is called export of goods, okay, and the other one is international services. Now, I have to make it very clear in previous case studies that export of goods do not necessarily carry a 0%. Remember the phrase in GST Act is the controller has to be satisfied. And therefore, you have to satisfy the export documentation requirement. Only then it is really the export of goods that we are talking about, in respect of which you apply 0% in your in your return. Okay, so this is why I said you may think that a supply of goods to customers overseas is actually a zero rated supply. Not true until you have satisfied the export documentation requirement. All right, so the other type of supply that is zero rated is called international service. Okay, here's one thing you need to know. Supply of services to overseas customers doesn't mean it is international service. International service is spelled out very clearly under Section 21, Subsection 3 of the GST Act. Only those services listed under 21.3 would be regarded as international services, based on which you apply GST at 0%. And each and every subsection under 21.3, for example, paragraph J and K, comes with their conditions. If you can't satisfy the conditions spelled out in these paragraphs, it is not international service, and therefore you cannot apply zero rate to your supply. Does that make sense? So therefore, not all export of goods can be zero rated. Not all services rendered to overseas parties is known as international service, where you can apply the zero rated GST rate. Okay, so it is pretty important for you to know what constitutes zero rated supply for GST purposes. And then once again, for export of goods, remember the key is that you need to demonstrate the goods are exported, or eventually they will be exported. And of course, you have to satisfy the export documentation requirement, and that is for export of goods. Okay, so you have a situation where you are the supplier in Singapore and the buyer happens to be overseas, and you may say, hey, you know what, I export the goods out. The fact is this, again from experience, almost all of my clients' export arrangement is not controlled by them. The export arrangement is controlled by the buyer. So that is what we call indirect export. So it's because you do not have the control of the export arrangement, you have to be very careful to ensure that the goods are really exported, or to be exported within a famous rule called 60 days from the time of supply. Because you have no control, how can you be sure that the goods are exported? Okay, so sometimes I have clients who come to me and say, hey, it's already 59 days. Okay, it's one more day before the 60-day rule lapses. I still do not know whether the goods are exported overseas or not. I say, well, this is the reality. What a best practice that I advise my client would do, which is not part of your study material, but it is good to let you know what is the best practice. It is to address the issue upfront, black and white, in the purchase order or the sales agreement. That basically says that, well, I'm obliged to charge you GST if you cannot supply or provide me with the required documentation after 60 days from the time of supply. And of course, the time of supply you would then define in agreement via a separate paragraphs. So that gives you the opportunity to charge the 9% to your buyer. I mean, if you don't do that, most buyers will say, well, I don't care. I have already paid you. I've already agreed to pay you that sum. I'm not going to pay you more. But with that agreement, the buyer has been alerted there is a possibility for some reason they have to come up with that 9% and pay to the seller, which means you. Okay, so this is a situation. Number two, for services, again, it is basically really about Section 21.3. So again, you could be a service provider in Singapore and you render the service to someone overseas. Okay, so the question is that, can you zero rate the supply? So you need to look at Section 21.3 for that. Now, how about exempt supply, which I'm going to explain later, because exempt supply is you cannot charge GST. Whereas for zero rated supply, it is part of the taxable supply, and you charge GST at 0%. Again, notice that it may not have any cash flow effect, but the correct classification of the supply between exempt and zero rated supply becomes so important. All right, so let's talk about business implication and accounting. Again, for accounting purposes in your GST F5, to mean the GST return, you do know that there is something called the right boxes. in the right place. So you need to fill the right number. So if this is the zero-rated supply, you need to fill the number in the right box for zero-rated supply. You cannot put it under exempt supply, or vice versa. Okay, and please keep documentation, especially when it comes to export of goods, your export documentation. You have to keep track and have a set of the required documents with you, because the control of GST may ask you to prove, ask you for these documents anytime. Okay, then you must be prepared to submit the documents for audit, right? And then the next thing to take note of is about the let me say business implication is exempt supply versus zero-rated supply has something to do with the claim of the input tax. In this case, especially, is what we call the residual input tax. Again, it's not the focus of this presentation, but just take note, input tax claim. If you are making exempt supply alone and no taxable supply, you are not allowed to claim any input tax. But I've actually got a case many years ago, is a client who feel guilty about claiming input tax. And the client is actually a major exporter. As you can tell, major exporter, it supplies majority to overseas customer and they charge 0% because they are major exporter. Of course, assumption is that they have kept the export documentation to ensure that they are right to charge GST at 0%. So this client called me one day and said, I feel guilty of claiming input tax from IRAS. I say, why do you feel guilty? Like, it's your right to claim back input tax when it is legitimate. Have you got your valid tax invoice? Have you proven that it's genuine business purchase? I mean, if you have got all these requirements satisfied, there's nothing wrong to claim back input tax and you feel guilty. Because for income tax, a lot of people thought that they're supposed to pay. They're supposed to pay tax as part and parcel of their obligation. It's like claiming refund from the government is very rare that you can hear from income tax. But for GST, it is a different basis. Because for GST, if you have to charge and account for your output tax, you are required to. But let's suppose that you really can demonstrate that it is a zero-rated supply, and therefore you don't have any GST charge at 9% but 0%. At the same time, you are making business purchases that are subject to GST. It's okay for you to claim back the input tax credit as a refund from the government. So there's nothing that I told my client, that's what I told my client, you shouldn't feel very bad. In fact, you shouldn't feel bad at all. Because unless you tell them you are not doing a return properly, or you do not keep track or maintain documentation as required, then you can claim it back. You can claim back the input tax without any issue. What to do? This is some funny clients in Singapore that I encountered. Okay, so let's look at the case study, and the case study is about regional exports. Okay, so regional export specializes in shipping electronics from Singapore to various markets in Southeast Asia. So this is an export. So question to think about, the criteria for zero-rated supply and how is that affecting regional exports business operations. Well, first of all, if you see that this is a supply of goods, so the template says that it has to apply the place of supply rule for goods. And now you have seen this a few times already throughout the presentation. You know that regional export is based in Singapore. It is exporting the electronic products to overseas markets. And therefore, you may say that this is an export. But how do I know if this is an export? Well, partly the deal is I need to ensure that I can satisfy the export documentation requirements. So therefore, it is important for regional exports to go to the e-tax guide to identify the particular scenario that is applicable to its transaction style or nature, and then take a look at what are the documents required by IRAS, the transaction document and the transaction document and the transshipment documents, if I'm not wrong. Okay, so they have to maintain for each transaction the required documents and keep track of that. And if they can, then this becomes a zero rate GST or zero rate supply, and that's how it works. Now, again, from a practical viewpoint, this is like, if you study exam, you won't see this. In a real life situation, you might see this. The problem of why so many companies have this issue where they cannot keep track or maintain the clean set or the complete set of export documents required by IRAS is because you are mainly dealing with somebody who is a finance professional in the company. And I've explained a lot of this to my learners before. You are a financial professional, and what do? You look at the numbers in your office, but who are the one who keep track of the movement of goods in your company? It could be the warehouse manager or the warehouse guy. You call it just the warehouse guy. Do you expect the warehouse guy know GST? Of course not. This is where the breakdown happens. You know all the requirements. You do not teach the warehouse person to ask for a complete set of the documents. And when they come back to you and say, well, I don't have this, I don't have that, you may jump. You may ask, how come you don't know? But because the warehouse manager doesn't know your GST requirement, this is the reason why they don't know. How many of you know what I'm talking about? Do you notice that the communication is not one-way street? It is a constant education of different departments in your company to ensure that they know why you are asking them to keep track of all these documents. Okay? This is a bit different from income tax. Again, when it comes to export of goods, the person who is in charge of the movement of goods may not have the GST knowledge you have. That's why. Okay? So the business operation may be affected because on books you may say it is a zero rate supply. But in actual fact, it is not because of the lack of the complete set of export documents. And then it ends up IRAS asking, show me why it is zero rated, and you said, oh my god, I missed something. And then suddenly every zero rated supply has to be standard rated. And at that time, can you tell the buyer, I'm sorry, because of the tax authority is asking me to charge 9%, can you pay me 9% now? If you were the buyer, would you say yes? Of course not. Then you got to fork out from your pocket the 9% and pay to IRAS plus the penalty. This is the scenario that happens in Singapore very often. Literally every year, I have clients who are in this situation. So do not underestimate. It's just a very simple case study. The ramification of that in the real world is very serious. You've got to know not everyone in your company knows GST. So as a finance professional, what do? You've got to constantly educate your team why you want certain things. Don't just tell them, explain the why. And as a result, as a team, if we do not comply with these rules, the KPI of the company will drop. And your bonus and my bonus will drop as well. Does that make sense? Okay, so the next thing about types of supply, the third. Now, exempt supply in Singapore is pretty straightforward because it is number one defined in the fourth schedule. Okay, it's in the fourth schedule of the GST Act. And if you think like what are the types of exempt supply, number one is residential property. Residential property. Number two is actually what we call shares. Okay, there's one more, is called IPM, is what is IPM, cannot remember, but anyway, IPM is the precious material, or precious metal, sorry. Okay, so these are three types of very common exempt supply in Singapore. Okay, it's very straightforward. Now, I don't deal much of the precious metal, so I talk about shares and residential property. So how to apply exempt supply examples. So for example, for number one, if you talk about residential property, it came to me 1 year, many years ago, I think it's like 12, 13 years ago. And then he says, well, you know what, my revenue threshold, 1 million, I've exceeded the 1 million threshold long time, big time. I say, oh, great. So you may think, oh, does it mean he has to register? Okay, so I ask, what business are you in? It is a residential property developer. Oh, okay, residential property developer. So guess what? It is not allowed to register. Now, to notice the concept I said, the words I've just used, is not, you are not required to register. You are not allowed to register. Why? Because for GST registration requirement, you have to register when you hit $1 million, and the value is based on what we call the total taxable supply. Total value of your taxable supply. Or you may opt for voluntary registration, which another video will explain what it is. So let's think about it. Why would you go for voluntary registration? Well, obviously the motivation behind is to claim back input tax. But the premises is that you didn't hit your 1 million threshold. You still want to claim input tax. So that's voluntary. But in this case where I'm a residential property developer, am I making any taxable supply? Now the truth of that case was the company is not making other types of taxable supply because it's only doing residential property development. So as a result, I told her that you are not allowed to register because you are not making any taxable supply at all. So if you are not making any taxable supply, you are not registered, then obviously you would not be allowed to claim input tax. So you think about a lot of things I've explained just now. It's not scientific, it's not philosophical, it's not complex. The reason why I'm not allowed to claim back input tax is because I'm not GST registered. And the reason why I'm not GST registered is I'm not making any taxable supply at all. And that's what you need to understand. So instead of remembering all the rules, oh, exempt supply cannot claim input tax. Instead of remember the rules so rigidly, you ask yourself, let me understand the concept behind. Why am I not allowed to claim back input tax? Because I'm not registered. Okay. Why am I not registered? Well, it's not voluntary because you are not even making any form of taxable supply. Therefore, you are not allowed to register. As a result, you cannot claim back input tax, and that is exempt supply. I have another client who came to say that, well, you know what, I actually transfer shares to another company for consideration, so it's a supply. And again, transfer of shares is actually an exempt supply because this is what fourth schedule says. It's not, you just have to remember the examples for exempt supplies are very limited because there are just a handful of them in Singapore. So people who are not doing financial services, typically, or dealing with precious metals, then I just always remember properties, residential properties, and shares. Okay, so why am I saying residential property? Because imagine you are developing commercial properties or industrial properties. You may think, oh, properties exempt supply. Not true. It's only residential property. So if you sell commercial properties or industrial properties, and if you are GST registered, because at this moment you are making taxable supply, you have to charge GST. It's not exempt. So these are some of the pitfalls that happens in the Singapore GST practice that you should be aware of. Okay, so how would it impact and how do you manage? Again, there's a big topic on what we call residual input tax, which I believe that another video or your materials will cover. I just want to highlight the fact that if I'm making exempt supply only, then obviously I cannot claim back input tax. But if I'm actually making both ES and taxable supply, then something might happen. Number one, the question whether I can claim back input tax in full or 100% input tax it depends on whether I can fall within the de minimis rule, which is under regulations 28 and 29 of the GST general regulations. Again, this the whole topic on this. Now, this video I'm not going to explain in detail because it's not the major focus. But the fact is that you might still be able to claim back the input tax in full if you can satisfy the minimus. Okay? And then what if you cannot satisfy? Then your question is that I may have to claim for some common expenses. We call it common expenses such as office rental, your audit fee, professional fee, which you cannot pinpoint specifically to the making of taxable supply or the making of exempt supply. We call it residual input tax. Then what happens is that you are required to apply the formula, okay, to decide how much input tax you are not allowed to claim. And then when you are not allowed to claim, what is the implication of that? Then it goes back to another areas of GST which might be applicable to you, it might not be, it depends. Because a lot of people thought, since we have launched the reverse charge on 1st of January 2020, a lot of clients are concerned whether they are subject to reverse charge. And the reverse charge culprit, not culprit, but really the suspect or the general categories of people of peoples who are subject to reverse charge. The fundamental principle of which is that you are not able to claim back input tax in full. Who are they? Bank, insurance company, financial institutions, voluntary welfare organization, church, school. These are all the suspects, common suspects. All right, so they are not able to claim back input tax in full. Not to say that if you do not belong to this, you don't worry about reverse charge. But these are just the suspect. But the whole concept of reverse charge boils down to whether you can claim back input tax in full. So therefore, your understanding of exempt supply, and if you are a business that makes both taxable supply and exempt supply, it becomes something you need to be mindful with, just in case you happen to be subject to reverse charge, but you are not aware. I just finished one advanced GST class 2 weeks ago, and then I asked one participant, because I asked like, which of you in the room is subject to or is actually subject to ILC. So I highlighted all these categories, potential suspects, we call it. And then one person raised a hand and say, oh, my business is subject to reverse charge. So upon fact finding, realize that the reason why the business is subject to reverse charge is because it is a bank. No wonder. So a bank in Singapore can never claim back input tax in full. This is the fact. All right. So I gained the understanding of exempt supply has such implications which may lead to the determination of whether you are subject to reverse charge or not. So just keep that in mind. All right. So this is a case of a realtor. Okay, Cityscape. So it specializes in residential property sales and rentals in Singapore. So talking about exempt supplies that it makes. What are the exempt supplies? Well, if it is a realtor, it does two things: residential property sales, which is exactly what I've just said, right? Now, for rentals, you have to be very careful. What are we talking about? If you talk about residential property rental, the bare rent, which means the rental is actually exempt supply. But if it comes with furniture and fitting, and you rent it out, okay, as a fully furnished or partially furnished apartment, then the FF, the furnitures and rentals, are standard rated supply. So take note, not all rental or residential property is exempt supply. It's just the bare rent or bare rental is exempt supply. If the rental of the residential property comes with furniture and fitting, that part is actually subject to standard rated. So it's actually a standard rated supply. So be careful with this fine line. All right, so last but not least, out of scope supply. This one pretty simple. What is out of scope supply? It is outside the scope of the GST Act. Okay, how can that happen? Well, you may ask. Well, let's suppose we talk about supply of goods again. Out of scope supply can happen when you have a seller and the buyer in Singapore. And then the goods are at the time of supply overseas. And the legal title to the goods passes overseas. So therefore, it is an out of scope supply. If it is a supply of service, when is it out of scope? Is when the supplier or the service provider, we call it actually service provider, not supplier. I'll use providers in order not to confuse with the S here. So the provider belongs outside Singapore. Okay, when the provider belongs outside Singapore, it can provide services to a person who is also outside Singapore. Then of course there's nothing to do with Singapore GST. Or the recipient happens to be in Singapore. Now in this late, you've got to be very careful because we are now at the time of recording 2024, where we have already got reverse charge, and then we have got digital service, remote service. And then for the goods, for supply of goods, we also have something called LVG. Okay, low value goods in other words. So if the provider belongs outside Singapore, is there no GST implication for Singapore purposes? The answer, it depends. It depends on what? It depends on whether the recipient of the service based in Singapore is GST registered or not. If it's GST registered, then I need to ask myself whether the recipient is subject to an RC or reverse charge. If it is subject to reverse charge, then it is required to charge itself the GST on importation of services. If the recipient is not GST registered, then of course the Singapore GST requirement would determine